Hi, and welcome to Market Insights. Now, over the past couple of weeks, the markets have been rocked by Donald Trump's tariff announcements. The higher than expected tariffs and then subsequent 90-day pause on some of them triggered dramatic volatility, as I'm sure you've all seen. And at times like this, it's crucial for traders to use their risk management tools and techniques and stay informed. Now, we've got a little bit to cover this week, from key employment data in the UK to rising inflation pressures in the UK and Canada and major central bank decisions. So let's dive in. Now let's start with UK data. The Bank of England will announce its interest rate decision on the 8th of May. So the upcoming labour and inflation reports could trigger significant price volatility. The labour market data will be out on Tuesday at 9 a.m. GMT +3. Now, the last report showed that unemployment rate held steady at 4.4% in the 3 months to January. But here's the twist. Jobless benefit claims were on the rise, which could be an early warning sign for the economy. Wages also continue to climb, with average earnings, excluding bonuses, up 5.9% year on year, and real wages rising 3.2% when adjusted for inflation. Now, while that's welcome news for workers, it complicates the picture for the Bank of England. Elevated wage growth is a double-edged sword. Yes, it supports consumer spending, but it also adds inflationary pressures, which could delay interest rate cuts. Now, speaking of the inflation rate, the UK's inflation data will be released on Wednesday at 9 a.m. GMT +3. The price growth eased slightly in February, down to 2.8% from 3% in January. That was a bit of a relief, but the rate is still above the bank's 2% target. Now, some economists warn of potential inflation spike later this year, especially if the UK-US trade tensions escalate or energy costs rebound. Now, last month's softer than expected inflation numbers pressured the British pound. Will that trend continue? Well, we'll have to stay tuned to find out. But as I don't forget the impact of these tariff announcements are having either. Now, let's turn to Canada, where the economic outlook is becoming more uncertain. Recent surveys show business sentiment at its lowest level in years, with households increasingly anxious about job security and future price hikes. Inflation expectations have also shifted, with a median one-year expectations jumping to 3.8%, reversing over a year of steady declines. In February, annual inflation unexpectedly spiked to 2.6%, up sharply from the 1.9% figure in January, marking the highest rate in 8 months. This was largely driven by the expiration of goods and services tax and harmonised tax breaks, which boosted the price of many goods. Now, the rise in inflation gave the Canadian dollar a brief lift, but the support didn't last long. Let's see how the Canadian dollar will react to this week's data that will be released one day before the Bank of Canada's interest rate decision. Now, the central bank will announce the interest rate on Wednesday at 4:45 p.m. GMT +3. March job data added to the uncertainty. Canada lost 33,000 jobs. That's the first monthly decline since mid-2024. The unemployment rate rose to 6.7%, which was the highest since December. And now the Bank of Canada is facing a tough policy decision. On one hand, the economy is clearly slowing. Business confidence seems to be crumbling, consumer sentiment is falling, and job data is disappointing. Now, that typically would call for a rate cut, but on the other hand, inflation is rising again, and the expectations are ticking up. Add in these trade tensions with the US, and the Bank of Canada is stuck between stimulating the economy and risking a second inflation wave. Now, while the bank is widely expected to hold rates steady at 2.75%, the Monetary Policy Report and press conference at 5:30 p.m, that's GMT +3, could stir some major moves in the Canadian dollar markets. So traders will be watching for new forecasts and the bank's risk assessment for inflation and growth. Okay, next up is Europe. And on Thursday at 3:15 p.m, GMT +3, the European Central Bank will announce its interest rate decision. While a quarter-point rate cut is almost certain, the path forwards is anything but clear. Not really a surprise at the moment. The ECB's Governing Council seems to be quite deeply divided. On the dovish side, policymakers like Spain's José Luis Escrivá and Finland's Olli Rehn are calling for action, highlighting slowing growth and inflation risks. But hawks like Austria's Robert Holtzmann are urging caution due to uncertainty from US trade policy. At 3:45 p.m. GMT plus 3, all eyes will turn to the ECB's press conference, where President Christine Lagarde will explain the central bank's stance and forward guidance. More dovish tone than expected could weigh quite heavily on the euro, while a hawkish surprise could send it rallying. Either way, euro markets probably and quite possibly will see some significant volatility, so trade smart and manage your risk. Now, in March, the European Central Bank cut interest rates by 25 basis points. That was widely expected. Now, since the move was already priced in, the euro appreciated against many currencies. Moreover, while President Lagarde's comments were not particularly hawkish, they were in line with market expectations, which did not lead to a decline in the euro. So again, it's sometimes about what's said as well as that headline figure that you really need to pay attention to. Okay, and over to the US now. And in the US, traders are bracing for more from earnings season, just as Trump's tariffs stir up more volatility. So keep your eyes on these dates. April the 14th, we see results from Goldman Sachs. April the 15th, Johnson & Johnson, Bank of America and Citigroup are headliners. And April the 17th, we see results from Netflix. Now, earnings results could significantly sway market sentiment, especially with the global tensions that are brewing and, of course, Donald Trump's tariffs announcements. It's also going to be important to look at the forecasts that come out with the results. Those could well have some significant changes and impacts from prior results. That wraps up this week's Market Insights. With so many economic and geopolitical factors at play, we are pretty sure there's going to be some pretty significant volatility this week and in the coming weeks as well. So don't forget those risk management techniques. For real-time updates and expert analysis, visit the news and analysis section on our website. Well, thank you for watching and we wish you luck with your trading in the week ahead. Bye for now.